All right, good morning, ladies and gentlemen. Today is Wednesday, March 3rd, 2021, and I am back with another edition of the Wednesday live show. And I thought we'd take a quick look around the markets and the open trades and see what's going on. So far this morning, the S&P 500 is down about 0.5%. It's been kind of all over the map. There was There was a overnight rally and then a sell-off this morning on some job numbers that were a little weaker than expected, and lots of cross currents in the market. The S&P 500's within a few percent of the all-time high, yet there's a lot of stocks out there, especially the momentum stocks that have been getting kind of hit pretty hard lately. And of course, as you know, the reason for the recent market weakness, if you can call it that, the market's not really that weak, but a lot of stocks are weak. And so the the reason for that is rising interest rates, right? And of course, interest rates are still extremely low from a historical perspective, but the market doesn't like rising interest rates. And, I think it was back in, I'm going to say February 2018. Yeah, I think right at the beginning of 2018. I think, in January the market was just sort of, going up at a clip, and then interest rates started to rise and we got a pretty significant sell-off. So that was some time ago. I don't even know. Yeah, I can't even squeeze my daily chart out that far, but anyway, amazingly enough, if you actually look at the S&P 500 here, it's just barely off the highs. Just barely, right? As of yesterday's close, it was I think it was just a little over 2%, which is nothing. And so, S&P 500 still holding this rising trend line, and it'll be interesting because it seems like there's a lot of pain out there already, right? But here's the thing is I've looked around at tons and tons of charts, and I would say that the average stock is not anywhere near its all-time high, right? And even even a lot of the big, the FANG stocks and all that, quite a few of them are not really up at the highs. So they haven't been making new highs along with the index, which is kind of odd because we know the indexes are sort of skewed towards those big cap stocks. But your average stock is probably, well, let's look at Apple here just for the fun of it. Yeah, I mean Apple's, it's not down that much, but it's certainly not, within a couple of percent of the all-time high. So, but anyway, so here's what I'm watching, everybody's probably watching, is that same trend line that the S&P is managing to hold is has been broken on the Nasdaq 100, and so a lot of the momentum tech stocks have, especially sort of the high flyers, the stay-at-home stocks, I guess, have really been hammered and are down considerably. So, and the thing that I believe is holding the S&P 500 up is the financials. So financials are, they're right up at the highs here. As I mentioned, each time I pull up the financials, this was the high from 2018, I believe, or well, 20, I forget. No, not the high from 2007, right? So think about how many. This is a monthly chart. Look at all those years, right? So from 2007, it took like literally, to 2019 to get back to the prior highs, and then of course we took the pandemic dive there, and then now it's just back above that, but kind of crazy. What I was thinking about was the Russell 2000, the IWM. This line, that high was the high back in 2018, so a few years back. And of course, it was around the beginning of November, all the markets just blasted off and began, this trend that's currently underway. Russell 2000 sort of managing to hang on to this. I'm going to go ahead and move that trend line so that it connects like these three lowest lows. And this is since the beginning of November, basically. That's when everything started moving on its current trajectory. So as you can see here, the Russell is just barely off of the highs. So that's kind of interesting. And I got a watch list over on my other computer on Thinkorswim that's got maybe 10, 15 stocks in it, and literally like one of them is up right now. And so it's interesting to see the markets themselves hold up really well when under the surface there's a lot of stocks that have sold off significantly from the highs. So S&P and Russell, right up near the highs. I haven't looked at the Dow yet. Yeah, Dow basically still right up at the highs, and so you have the everything. Obviously, the Nasdaq 100, has sold off a bit. So I have a little bit different of a trend line drawn in the Dow here, just for the fun of it. I've seen some people that post charts basically that has this sort of a trend line. So you could also draw sort of a similar. I suppose you could draw a trend line similar to the other ones on the Dow, but it's a little. There was this one little sort of sell off in the Dow that took it below that trend line, but yeah, I mean the Dow out of all the indexes to look at, the Dow is probably the least useful. So thinking about moving to a different charting platform. So I was playing around with something last night, but of course I need something that is really easy to blaze through like this. And in all these years, I've never found anything easier than these free stock charts. But sometimes change is inevitable. So I have to. The funny thing is, these free stock charts, they only work in Microsoft Internet Explorer. And I would imagine that at some point they're going to depreciate these things just because I mean no one's using them except me, right? But I mean the cool thing about it is they're just so easy to use, and of course you can't really see it up here, but I've got all these different tabs set up with different configurations and indicators, and I just know these things like the back of my hand. And so the other platform I'm thinking about using is I'll have to play around with a little bit more, and of course I'll have to pay for it in order for it to save my watch lists and all my markups and that type of thing. But the time may come soon. We'll just have to see. It's a little bit clunkier. That's the only thing. I suppose I could get used to it, but I'm just not sure that I can do what I can do over here as fast. And we'll just have to see. I know the zooming in and out is not quite as, because I was playing with it last night. The zooming in and out on the stock charts is not quite as user friendly as this. So, but anyway, with all that aside, I wanted to take a look. We have a few new open trades here, and we have a couple that have been open for a while, right? Exxon Mobil and the MOH, and then we've got these three that just triggered in this week. And so let's take a quick look through those and see what they look like. So Microsoft, of course. So we had a trade in Microsoft back here last fall that looked like it worked out pretty well, hit the target. This time, Microsoft, it wasn't much of a sell-off. This rally, and this is a really kind of a shallow pullback. But then again, it did pull back and begin to change trend. And so, with the market weakness, and especially the weakness in tech stocks, it's kind of dicey, right? Kind of dicey here, but at the same time, it's kind of a low risk setup, I would say. I would say it's relatively low risk because basically, you got let's see, this low right here was 227.88, right? And so basically what we got here is a pattern where Microsoft, took a dip, began to come back up, and of course, yesterday and so far today, I mean, like I said, the S&P's down, yeah, about a 0.5%, not quite 0.5% at this very moment, but so this is kind of to be expected, right? You see some market weakness, but the market's been kind of weak, and so prior to the past few days here, when the market's been weak for a period of time, we get pretty decent snapbacks, and we saw that on Monday. Remember, Monday was let me go back to the S&P here. Yeah, Monday. Well, the SPY, I don't know what this little tail is about right here, but it gapped up significantly and then just drove higher all day, right? So I can't. Another reason I'm thinking about moving my charts is because I can't pull up SPX anymore, and I always, in my mind, I follow the market based on the actual S&P 500 index and not SPY. So that's one of the main reasons I'm thinking about changing charting platforms for the show. So anyhow, Microsoft, one of two things happens. It either holds this pullback low here, right? Now it could spend some time. You get a couple of days where everything looks awful and weak, and then and then the market rallies back up. But hey, you never know. I mean, we could finally be looking at a sell-off. So, and unfortunately, this next one, this is kind of rare, but it happens. This next one triggered in this ENPH, and then basically, it triggered in and then had a pretty big down day yesterday. Now, this is a volatile stock, right? And it gets followed through to the downside today. But this sucker is extremely volatile as far as the ranges go, and you can see the length of these bars. And so you've had a lot of up down here. So this is semiconductor equipment. I've been reading about semiconductor shortages and all that kind of good stuff, but this is one that's sort of subject to the whims of how the tech stocks are going to do. And so far, triggered in on one of the fold over days, and so it remains to be seen whether this thing can go green, right, and salvage the trade. So it's extremely rare. We haven't had. I don't think we've had one. Well, I know we haven't had one so far this year that's like triggered in and just gone down and hit the full stop right off the bat. I'm pretty sure. So occasionally that happens, but it's extremely rare. Typically the trailing stop will at least ratchet up and move once before a trend reversal fails and you get stopped out. So this one's a little sketchy right here. Won't surprise me if it does get stopped out. So and of course, it's just extremely volatile. So we'll just have to wait and see on this. But it was a pretty big sell down. I mean, if you think about it, the volatility in this one is pretty extreme. I can't remember what it was exactly. I remember looking at it when it triggered in, because when they're on the pending list and when they trigger in, you can see the average range. So, but anyway, that high was 229 and that low was 148. So significant pullback, and then you had that reversal day. So we'll see what happens with this one. There's a potential for a stop out here. Next on the open list was kind of the same sort of thing. Activision, video game maker. This is probably the earnings report right here where it gapped up, and then general sort of weakness in tech, sold it off and managed to sort of close the gap, stabilized, started to reverse here, and got triggered in yesterday, and has been selling off along with tech stocks in the overall market. So not looking so good here. But again, stop loss right down there below the low of the pattern. It's actually, let's see, 93.50 would put it right up against these lows here, essentially. So that's the initial stop. And I talked about this last week. Everything sort of runs on everything in our system runs on cycles, and so when stocks sell off, and then and plus obviously stocks that are in decent uptrends, it's a pretty good uptrend here. You figure from it went from the low 70s up to over $100 and then pulled back a little bit. Not much of a pullback again. I mean, it's kind of what I call a shallow pullback. And then, it started to reverse, and so the system picked it up. But it looks like it's succumbing to overall weakness in tech stocks. Right, so we got 3 tech stocks that triggered in here. And so moving on, we have the 2 stocks that have actually been open for a while now, and they're in different sectors, so they seem to be holding up a little bit better. Okay, so MOH here, yeah, triggered in, made it it made some progress. Excuse me, not a whole lot, but the trailing stop has managed to ratchet up, and so there's minimal risk on this. It's also acting like it wants to it's stalling out a little bit, consolidating. Not a huge big deal here. Um, Even if it were to, and this trailing stop has been at 209 here for a period of time, since back over here, basically, I believe since last week. And it's just kind of hanging back here, and obviously, if there's a little more forward progress, it'll trail up a little bit, but it's sort of hanging back here because I'm not going to say that that the trailing stop is intended to like not get hit during a normal swing cycle, because typically it starts off near like the lows of the pullback once the trend starts going back up. But anyway, long story short, it hangs back just enough for sort of normal price fluctuation without getting knocked out. And of course, that's assuming that it's given the opportunity to ratchet up, right? A couple of the stocks that have triggered in, actually the 3 that triggered in this week, we're only a couple of days in here, so they haven't actually had the opportunity to trigger or to have the trailing stop move yet. Right? They didn't get any forward progress. So basically the initial stop as opposed to the trailing stop is sitting down at the pattern lows. So, but MOH looking okay here, I suppose. Nothing all that great the past week or so, but it's still hanging above the entry here, and with the trailing stop having ratcheted up, not a whole lot of risk, expensive stock. And last but not least is Exxon Mobil, which out of this batch, right? And we had a pretty good batch actually we had an excellent batch of swing trades come through the system last time around, and then we were down to just 2, right? Was it last week? I believe that when I did the show, we only had 2 open swing trades, Exxon Mobil and MOH. And so those other 3 are newcomers. And anyhow, Exxon Mobil has been doing really good. So this thing's up about 20% roughly. And energy is one of the sectors. Energy and financials are kind of helping hold up the S&P 500. I noticed that there's a parabolic stop that is kicked in here on Exxon Mobil. It's at 55.25. So I'm going to be honest with you, I wasn't paying attention. Let's see, that low is 55.35. That low is 54.87. So I'm going to guess that I wasn't paying attention to where the parabolic stop kicked in, but I'm going to guess it was it was well, huh. It's hard to tell because obviously it would have gotten knocked out right here on the parabolic stop, but no big deal, honestly. If if you want to, when the parabolic stop kicks in, typically that's when a stock has had a whole bunch of days of higher highs and higher lows. And then I'm going to guess it was right here, and I just didn't mark it up or notice it because I don't pay a whole lot of attention to it. And so, in which case, this gap down, this open here, you would have just taken your profits, sold right there. The other half, obviously, from the target. So it's we kind of leave everything up to the individual's discretion when it comes to a lot of this stuff because people have different sort of ways that they prefer to play swing trades, quite honestly. And there's any number of ways that you can do it. Now, I mean, obviously the easiest thing is to just play it by the book, right? You play it by the book. You when a stock triggers in, you buy at the entry, and then you take half off at target, and you follow the trailing stop, and then you wait to sell the other half when the trailing stop gets tagged. And so that's how we try and track everything, basically. But we do, if you've read through the strategies page, we leave a lot of discretion, and discretion can be scaling. With zero commissions nowadays, you can scale in and scale out uh, multiple tranches, and you don't necessarily have to go, half 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 out. And so when they gap up, you can buy a half position and set a limit order to get in at the other half. In which case, this one would not have gotten filled on the second half, and so I think that's probably one of the best entry techniques. And so you're going to have a little bit different average cost than what everything's measured against the trigger price, but that's just a function of the way stocks gap in the market. And see, here's the other thing is when I talk about discretion, right? When Exxon Mobil was triggering in, we were talking about how the dividend yield was like, almost roughly 10%, as I recall. And so, quite frankly, if you get into a stock and it's paying a 10% dividend, there's always a chance that something like this, that it was a really good entry, and you could go for, theoretically, this stock could go for a very, very long period of time. Say, and I'm just speaking hypothetically, but say over the next year that it never goes below, this trigger price here, or the entry price. And someone decided that, hey, this seems like a pretty good investment, right? A good entry point for a longer term investment, and obviously ExxonMobil's is that type of stock, and with a 10% dividend, my God, people interest rates are rising to 1.5%, and people are freaking out about that. So, quite frankly, I'm really surprised and of course, oil's gone up considerably too. Oil's been hovering around $60 a barrel, so everything about ExxonMobil is looking pretty good here. And obviously, there was a major trend change back here in November, and the stock has made, extremely significant move. And fortunately, we got triggered in on the first, really good pullback of this trend move. So you got longer term trend change, a really decent orderly pullback, and then jump in on the trend resumption. And so this is kind of the poster child for the way that the system works. And so unfortunately, some of those other charts, they don't look nearly as orderly or as good as this. But anyway, back to the discretion thing is, there's no there's no hard and fast rule that says that if you get a really super good entry like this, that you have to, that you have to sell out your whole position when it hits a trailing stop. And so if somebody went in with, this is a lower price stock than some of the other ones we deal in. So somebody went in with, a significant amount of shares, right? Um, there's always the option of, taking a third off at the target, following a third up with the trailing stop, and then letting the rest ride, and maybe just maintaining a stop at the original entry, and who knows, you could end up collecting that 10% dividend, which was the dividend yield at the time that it triggered in. So anyhow, so that's that. That's the open trades here. Real quick, I thought maybe we would jam through the pending trades again. They've changed a little bit here. And so let's see what the pending trades look like. Um, the list is kind of growing a little bit here. And I know last week I actually looked at these pending trades, and a few of them I think I put like little marks on the chart. And so I'm just kind of curious like where they stand now. Now Sienna, this one just hit the list, right? So no marks on this. This one's just basically, big uptrend, starting to pull back. This thing looks a lot like a lot of stocks I'm seeing. Like sort of, there's like these broadening tops, I guess you call it, sort of rounding tops. So seeing a lot of this in the market. And looking through this pending list will give you a pretty good idea of, what the typical stock kind of looks like right now. So anyway, this one's just sort of setting up, not really anywhere close to triggering in. So GDS, this was actually one of the bigger gainers, as I recall. Back towards the end of the year on that last cycle, you can see all the initial stop and the entry and all that good stuff, and blasted through the targets. But anyway, it's back in play sort of, because it's selling off. You can see this sell-off prior to the last trade was a little wacky. I mean, it was kind of it started off with the humongous long-range day down, but this is a little bit more orderly. But the idea here is that this is still a ways off from triggering in, right? It needs to sell down like it did over here, and then sort of bottom out and turn back up, and so it's not quite ready yet. ZTO. This is setting up okay here. What I've noticed is that a lot of the pullbacks that are happening right now, they kind of make the chart look ugly, right? I mean, it's kind of an ugly looking chart, but then again, sometimes sometimes if that gets broken, look out. But it could come back down and then actually turn around. So looks to me like there's a setup starting to form here. It's a little bit early. I mean, that's why these are on the pending list. Sometimes you can see a stock on the pending list literally for weeks before it actually triggers in, and that's kind of the idea too. Part of it is the idea. So as I look at this right here, it still needs to do something like just sort of bottom out or trade sideways or whatever. If it breaks below this, like if it takes out this low, it can even drop off the list, and you've probably seen that. You've seen stocks hit the pending list and stay there, and then if the price continues to drop past a certain point, then it's just gone off the list. So if it doesn't trigger in, it's just gone off the list. So let's keep moving on here. I don't want to take too much time today. Another one that, this is a pretty nice looking chart here. This is a really nice uptrend. Now the stock's having a pullback, and so depending on how that pullback manifests itself, let's see I'll go ahead and put roughly the area of the trigger on here. So obviously right now the trigger's up here, but real quick I'll just for the benefit of benefit of a couple new people, I'll just go over, how these pending stocks work. And so the idea is that it hits the list, stock in a nice uptrend, starts pulling back, and then it hits the list, and the trigger price initially starts out like sort of way above the current price. And so don't get confused by thinking, well, why would I buy the stock, way above where it currently is? The idea is that the trigger price kind of comes down to meet the stock out in the future. And so here's sort of the idea is that, this stock sells down like this, and then maybe over here, um, maybe in this area, it sort of bottoms out a little bit, and then it turns back up, and then this trigger price, moves out in the future, moves down to like here, right? Moves down to here, and then you get the price reversal. You get the trend change, like the price reversal trend change, and then it triggers in here, right, out in the future. And so that's sort of the idea, right? And then you get so let me move that over here. So that's kind of how it works. The trigger price is going to always start off like way higher than the current price, and then it's going to work its way down as the stock comes down and sort of bottoms out. And then ideally, in the ideal situation, what happens is the sell-off runs its course, the stock sort of bottoms out, begins to turn back up, and by that time the trigger price has moved, down relatively, close to the current price action, which ideally is consolidating, right? Then the trend resumes, like trend resumption of this, and we get filled on the way back up. So, and of course, as you guys know, everything is not always ideal, but that's sort of the basic premise of how the pending list works and how the system works. And so there you go. Okay, so real quick, let's just look at the rest of these. VNET, still in pullback mode, looking kind of nasty, but then again, doesn't really look like it's gonna trigger in anytime soon. Um, and so, the current market weakness obviously is having an effect on a lot of this. This one too, this CYRX, it's sold down quite a bit, but it's still in the process of, selling down. I don't know if this is some sort of a base that it's trying to form or not. It's kind of odd. All those lows being right there in the same place, these lows and highs over the past week or so. Um, so in theory, I mean, this is not looking so great, but it is what it is. Gilead. Okay, well, Gilead, this was the one I believe last week that I said kind of looked like the best sort of setup. And so this is a great example right here. So we got the sell down underway, right? And last week this was the trigger price right here. And this week the trigger has moved down a little bit. And I mean it's still hanging back. And the reason is that theoretically, like in theory, we don't want to get triggered in, prematurely, right? Like we want actual. So you can see the trend line break there. So like we didn't really want to get triggered in yesterday, just right on that trend line break. Although that could potentially work, but the idea is that we kind of want to confirm the change in trend, right? So you can see a stock that's selling down, and then you get like 1 or 2 days where it looks like okay, it's turned the corner, it's headed back up, and and um and then it fails, right? And so sometimes we do get triggered in at exactly what I just described, but ideally. And of course, everything's programmed on the back end. It's all data, and so I'm sort of, I sort of describe what I think the system is trying to do via its programming, but ideally, the change in trend, you want it to be confirmed, right? And so anyway, I mean, this could, we could consolidate, this price could consolidate for a few days or pull back a little bit or whatever, and this could still come down. And then basically, we want to see the closing price over the trigger price. And so that makes sense when it comes to confirming the change in trend. And that's why occasionally, and over a long series of trades, you'll see a lot of different stuff happen. And so you'll see ones where the highs keep poking through the trigger, but you never get a close above it. And so, as I mention each week, that's why we use the closing price as sort of as the entry confirmation. And if I turn this into a line chart just using the closing prices, it would make a lot more sense. So, moving on, we have Ballard Power (BLDP). This one is like EV stocks, right? So a lot of the electric vehicle, the EV stocks were super hot a couple of months ago, and they were going crazy, parabolic in that, and so a lot of them was sold down. And I mean, it's sort of a sector by sector thing, stocks and sectors come and go from favor, and so a lot of the previous high flyers are selling off significantly right now, and so a lot of the EV stocks have gotten sort of hammered recently. But anyway, this is one that is, in the process of setting up, and so as of right now, somewhere above these highs, a close somewhere above these highs will be a good entry spot. So let's see. Yeah, so that looks about right. Maybe a little bit higher here. So there's the current trigger there, and this type of stock, it could definitely this could trigger in pretty quick. So I kind of like this one a little bit. It's going to depend on the overall market, obviously, and in the EV sector, but obviously the chart pattern looks kind of nasty now. So what you'd want to see is some sideways consolidation. Maybe even a little further, a little more of a pullback. I can't even draw a downtrend line across this. Typically, I like to be able to draw like a nice, smooth downtrend line that gets broken or whatever, kind of like on Exxon Mobil, but this is not nearly as orderly of a sell-off, but it's still setting up. And so, moving on, Tesla, same way. Tesla is kind of getting to the point where you can draw a downtrend line on it. It's not the greatest like trend line. And so, obviously what can happen on these is, and this is a pretty good example. If a stock sells off kind of quick and deep like this, you draw a trend line like this, and it can easily pop up here, break this trend line, and rally up a little bit, and then continue down. And so it almost feels like there needs to be like another rally and then sell down on this. But um, percentage wise, this is pretty significant. So at some point, I mean, Tesla's an extremely controversial stock, right? And this is a pretty nasty pattern right here too. But I've seen, over the past couple of years, you've seen a lot of patterns that look really nasty like this, and then stock maybe trades sideways for a little bit and turns back up. And so, I mean, look at it back over here, right? Big rally, and then here, and this whole area here was kind of not all that great looking, but since November, yeah, it's like mid-November is when everything just took off. So anyhow, so there you go, Tesla on the pending list. Here's the thing about it, right? Is those of you that been following this, trigger's way up here right now, right? So what that tells you is that the stock still, is that this pullback is still underway, and theoretically, I mean, it's very unlikely. Well, I should say, but it's unlikely to trigger in anytime soon up here. What's more likely and what's ideal and what the system, is shooting for is for it to trigger in at a lower price, out in the future, right? So there's the current trigger price. Theoretically, you'd want to see this thing sell down, consolidate. Some of the indicators like bottom out, stochastics, MACD, and all that bottom out, out in the future, and then ever so gracefully start to turn back up with a trend resumption. And so, just depending on the price action, theoretically, it could trigger in, weeks out in the future at a lower price than the stock's trading at now. And so that's how it's designed to work, right? But then again, stocks they don't always do what you want them to do. As a matter of fact, they seldom do what you actually want them to do. And so, there's every possibility that it triggers in, out in the future at a different price. Not extremely likely to trigger in right now at the current trigger price, and so that's why you want to check that each day if you're following it, because sometimes they'll change on a day-to-day basis. Or the easier thing to do is you get up in the morning before the market opens and just check the triggered list, right? The triggered list right here on the pending trades list, triggered today. And basically that lets you know that the stock, had a previous day's close above the trigger price. So, okay, one left, and then I will wrap this up. And man, this one has been on the list for a long time. And so figures, like this is the one. This is interesting because this is sort of it's what I was talking about drawing like a steep trend line. You can see how it's like kind of all of a sudden, the past couple of days, it's starting to poke above that trend line. But so, this is potentially here. Potentially, this thing is starting to bottom out, and right now the trigger price is still kind of above the price action, but this one and this is a little unusual too because it's such a low price stock. We don't see a whole lot of low price stocks hit the list, but this one could potentially, there's a trigger price. It could potentially trigger in out in the future, right, at a lower price. So it's starting to sort of shape up. It seems to me that, and I'm not positive about this, but if for some reason it breaks below this low before it triggers in, it'll probably be gone off the list. Right? This is sort of the last hurrah, I would imagine, for this particular stock. And I don't really know anything about it, but this little price consolidation here, my guess would be that if this low right here breaks, that's probably it. And so it would just drop off the triggered list. So it's either gonna, and this is just hypothetical, right? Like hypothetically, this thing could trigger in out in the future if it were to chop around sideways here and then start to turn back up. So you can see obviously there's something going on with this, but it's not a bad setup. Sometimes you'll see like these round trips or whatever. The stock will like have a big humongous rally and then sell off like this and then consolidate, and you could get a nice turnaround in this. So we'll just have to see. But anyway, so that's that. Real quick, Qs are floundering around these recent lows here, not looking so hot. And I think that that's kind of affecting the average stock, right? So Russell 2000, I mean, just barely off the highs, right? Just barely off the highs, and so it's just amazing. Well, and then of course the S&P, right? It's amazing how the indexes, the S&P and the Russell, are kind of masking underlying weakness in individual stocks, which, quite a few of them are getting really hammered. So, interesting sort of environment. But so with that said, I will wrap it up for the week. So, thanks for tuning in. I will see you guys back here same time next week.